welcome back. We will discuss what is happening in DeFi, what's going on. We will explore together why DeFi is a paradigm shift in the financial industry as we know it today. All right, guys, and welcome back at On DeFi. And today we have a special guest. Today we have Guillaume, also called McFly, from 80 miles per hour. And these guys have built a fixed interest rate protocol, and it is, in my opinion, one of the bleeding edge teams that's working on DeFi protocols. They're de-risking DeFi, and they're making it so that you can, basically own shares in a bank where you actually deposit some of your savings. It's amazing. Guillaume will tell all about it. But before we start, Guillaume, tell us a little bit about yourself and how did you get started in crypto and DeFi?
Yeah, hi everyone. First, thanks for having me here. It's really cool to be able to exchange on all of that. So, my background story is basically I started working with Zephram in late 2017 on our first DeFi app. The name was btoken.fund. It was an asset management tool on chain, like a hedge fund on chain, with some mechanism inside to be able to have some meritocracy in the way to manage the funds. And yeah, we were like basically starting with that, and after like building other stuff, like Fantastic 12 also, like some DAO product on top of Discord. And in October 2019, we started drafting some stuff around 88 MPH. So yeah, we are working daily together since 2017. Zephram is my partner, is the co-founder of 88 MPH. And yeah, like that's the background story.
That is amazing, man. And yeah, I've been following you guys for quite some time. Even I think in DeFi 101, the B token, I didn't mention it in DeFi 101, but I did definitely look into it. And also the 80 miles per hour is mentioned also in the DeFi 101 section in the Ivan on Tech course, where then already you built a protocol where you could deposit DAI and get like your interest rates upfront, but your DAI was locked, right? So that is the beginning of how you started. And I think it was started during a hackathon, if I'm not mistaken, right? Or
it wasn't a hackathon, but it was like indirectly evolving according to some stuff happening in hackathons. Like the original idea regarding 88 MPH was to start with a swap rate, but it was definitely a bad idea in terms of user experience. Like nobody wants to wait another party to get his fixed interest rate. So we wanted to iterate on that. And after we started exploring this upfront fixed interest rate distribution, but it was also a really bad idea. Bad idea because in terms of performances, you can't have like really the compounding effect. So giving upfront interest is not really like the best thing you can do. But it explains why we named the project 88 MPH, because it's a reference to Back to the Futures. And when you give upfront interest rates to someone, it's basically you are future forwarding some money, explaining the whole things regarding 88 MPH and Back to the Future reference. So we just kept the brand and ditched all the bad ideas, discontinued the upfront stuff. And currently, yeah, it's the way we are like doing 88 MPH currently with the V2.
Yeah, that is really cool, and you guys really are like an anti-fragile team. You evolved a lot from different angles, and I think the product now is very, very solid. There's a couple of security audits, and I also see the money you lock in there, nobody can access. So it's similar how Curve does it, or other protocols does it. Once you lock it, it's only you can unlock it with your keys, etc. I like that. If you also want to get like I talked also about the NFT drops that you guys are doing in my other separate video, and also I very quickly touch on the protocol. We will dive a little bit deeper in a bit, but maybe you want to tell a little bit about the NFT drops, some other like, because you guys are doing so much at this point. What is the main feature that gets you most excited about 80 miles per hour?
The most exciting feature is still for me the fixed interest rates, because it's like a so boring and basic product, and everyone will need this kind of fixed yield, fixed income product like that are really basic and boring, but the, like one of the largest markets currently in traditional finance, and we are mainly still targeting this kind of product because it's where everyone at the end will feel comfortable storing some assets and earning some yield on top of it. Like currently, there is some market fits, but there is like all the things regarding like degeneration, like degen stuff, DeFi, like the crazy summer we got. Yeah. So it's not really directly targeted towards retail right now, but we are going in that direction. Like there is like scaling solution that will be ready in 2021, like 2022 maybe there will be ETH2. So definitely when we can onboard retail and we have like reasonable cost to onboard retail, it's definitely going to be something quite huge in terms of like product market fits for sure.
Yeah, and
so for me, it's the most exciting. Yeah.
And also people that are watching here, so all the links, all the things are below. In a bit, we will actually do some hands-on, working with the protocol. But what I also like about your approach, which you told me, you have an active DAO at this moment, and you're actually looking for other teams or protocols to maybe build an interface and use 88 miles per hour as like a core protocol backend, right? So like a DeFi building block for fixed interest rates. 88 miles per hour is the protocol building block that you want to use as a builder, right?
Yeah, and it's interesting. Like, it's really a good questions regarding like how we are looking at composability and how we want 88 MPH to be like this kind of DeFi primitive. Like currently, the V2 is a bit hard to onboard new developers building on top of 88 MPH. There is some products that are using 88 MPH under the hood. Like there is Debaseonomic, there is Mushroom Finance, so some yield aggregator or like stablecoin things. But it's like with a lot of constraints. So it's not really easy right now to build on top of 88 MPH. So what we are cooking currently is a V3 that we want to release in May. And today we will release also the specification, like the precise specification regarding this V3. And the main focus will be being sure that it's as easy to build on 88 MPH as it is to build on Compound or Aave, with like the flexibility needed for strategists like at Harvest, Wyern, or other yield aggregator who want to build strategy on top of 88 MPH to do these kind of things, and like removing all the constraints regarding 88 MPH is the goal, and also de-risking all of that. So that's the target for V3. And yeah, so yeah, to answer clearly your questions, definitely 88 MPH is a base layer for other tools or product to build on top of us for sure.
Yeah, because I mean, the thing is with a product like this, where I think I'm just going to share my screen here for a little bit, right? So I think the thing is with a product like this, it's like we're trying to communicate to people like deposit some assets and you get a fixed interest rate, but it's a little bit more complicated, right? Because there is also a whole market behind this, because you cannot just give a fixed interest rate if you don't have a buyer on the other side, right? So 88 miles per hour is basically the marketplace for people that want to speculate on this interest rate, and that's more sophisticated users that are doing that, and then you can build a front end for more for retail users or users that not necessarily want to dive super deep. I personally love the 88 miles per hour interface, but I can imagine that there's maybe some retail side that is like, well, I just want to have a Coinbase like application on my phone, click and save maybe like $1,000, and then there's a aggregator that aggregates like all the smaller thousands of bucks in one big bucket, right? something like that I can see evolving probably.
Yeah, and like the goal for like the V3 of 88 MPH is making sure that not us, but someone else can do this kind of Coinbase-like interface on top of us really easily. Like there is definitely other DeFi players that will do this kind of work really better than us. Like our main goal is being sure that what we are building is working when there is a bull market, but also when numbers will go down, things will go south, this thing will continue working. And adding the details regarding what you were saying, the way it works is we are offering a peer-to-contract approach regarding fixed interest rates. So you don't need to wait another party to take the opposite side of your position. So you can just, like you are doing here, you deposit like 3 CRV, for example, and you will get instantly your fixed term. So for like a maturity of 7 days or like 30 days or 1 year maximum, you will get what you see currently in this interface. So currently we are offering a fixed APY of 3% on the CRV is what you would get at the end. So you sign this transaction and the contract is done between you and me and us, 88 MPH, without waiting any other parties. The way we deal with that is when you deposit, you will create some deficit in 88 MPH because we are giving you these fixed interest rates. So there is a deficit somewhere was created. So we are de-risking the protocol and dealing with this deficit, this debt in the system by selling it to someone else. And we are representing this debt with the floating rate bonds. So that's another section in the app where people who are like who want to have a long position on the floating rates, compound, AVE, etc. They are like optimistic about the increase of the market rates, and they can speculate on that by buying the depth of the ecosystem of 88 MPH. So it's the way it works, actually, the way we are able to offer this peer-to-contract approach regarding the fixed interest rates, and also being sure that we can de-risk the protocol and making sure it scales nicely in any context, in any market context.
Exactly. And basically, how it works, what I understood is like, indeed, as you said, and that's why I think ADMS will be a primitive, more of a building block than of necessarily to, you don't want to do everything yourself. And that's also the beauty about DeFi, where you can focus on the marketplace, displaying all the data, making it cool and fun for people to interact with this. And this is basically a marketplace. People are buying this because you can see, I think in this list, I'm trying to look for it, but all the tree curve pool are like sold out now, right? Am I correct? Or
can you repeat that?
It seems that all the people that deposited the tree curve in the tree curve pool now have, on the other counter side, have somebody bought their debt and speculated that there will be a higher or maybe lower yield, right? So, well, higher yield actually. So you get the 3% here, and there's actually on the other side, I say I want to have a fixed rate of 3.8% on my tree curve pool. And then you can actually fix this by, on the other side, there's a buyer that buys this risk, and then that is locked into place, right? If I'm correct.
Yeah, there is an important thing maybe to explain regarding all the fixed interest rate bonds are working. When we offer 3% on free CRV, for example, that means that we are taking 75% of the value of a 30-day exponential moving average of the floating rates on the underlying protocol we are using. For example, for free CRV, we are pooling the floating rates on Harvest, and we are offering 75% of this exponential moving average to all depositor who want a fixed interest rate. So currently, the way it works, like, is you get 75% of this 30-day EMA, and when you see here, like, buy floating rate bonds, and you have like current 30-day EMA floating rate, current 30-day EMA floating rates APY, like it's at 8 or 6. I don't see it well on your screen, but it's something around, if you put it at the 50% of the slide.
Yeah.
So yeah, here, that's the current EMA for Harvest free CRV pool. So when you buy, for example, a floating rate bonds, you will get the return that is displayed here, like the 96% estimated ROI. So imagine, like, in like maybe 300 days, the floating rate bonds reach maturity, because the underlying fixed interest rate bonds are reaching their maturity too. So you can potentially earn a ROI of 96%. And this is something that will happen if the EMA stay on average around those lines of 8% current EMA. So if the market rate on Harvest go down, you will earn less profit, or maybe you will be at a loss. But that's a speculative tool. You are like speculating on the rates of Harvest, so the floating rate of Harvest. So it's a way it works. Maybe you will earn a lot. You will have a lot of upside, but maybe you have also downside.
Yeah, and that's the beauty, right? So we're making the de-risking, and we're democratizing it for more people to actually participate in this game, basically, right? Because normally, if we look into a centralized financial system, these complex financial instruments are only available for the guys in the expensive suits and cigars, right? So there's only for the big bankers that can play this game. But now, actually, we can all anticipate and gamble, or like anticipate again, right? So at the one hand, you have one person that wants to have the fixed rate API, and on the other hand, you have a person that's speculating on the API yield. Yeah. Okay, I think that makes a lot of sense, and I hope everybody also understands this explanation, because also for me it's a little bit hard to on the exact workings, but once you get it, it's a really cool concept, I think. And if there's any questions, drop it in the comments below, and then we will answer that later once we see your comments. Another cool thing is that, like, sorry, what do you want to say?
No, yeah, go ahead. Like, I just wanted to add, like, that to recap that is you have these floating rate bonds that are like the main de-risking tool, ensuring that the whole system can guarantee that the pool will stay solvent and 88MPH will stay solvent. And it's we are like approaching the de-risking strategy in 88MPH like onion layers. So the floating rate bonds are layers in the de-risking strategy of 88MPH. Like, it's something that make it more secure, but it's not something that, if the floating rate bonds doesn't work or nobody are purchasing them, it doesn't mean that it breaks the system. It's just a layer that make it more secure, and there is other like mechanism to ensure all of that. That is like kind of de-risking. But one thing I want to be like honest with everyone, like, you can say that 88MPH is at 100% guaranteeing everything. Like, it would be a lie to say that. So there is definitely smart contract risk. There is financial risk also associated by using this kind of product. So it's definitely like your audience need to be aware of all of that, like, as everywhere in DeFi.
I think that's very nice of you indeed to say that. And yes, we're democratizing finance, but every percentage gain is a risk. also if you put for 0.1% your money in a bank, you can still lose it, because like there's always a risk if you get a return, and especially if there's a 96% like return, of course there's a high risk that because we're basically saying here that the floating rate prediction is 8.6%. As we discussed this, Diego, like also at DeFi Capital, we have like a stability fund, and we did like back testing, and we also see that in more bearish market sentiments, these rates can drop to like 2% or 3%, right? So then in that scenario, you will, if I'm correct, you will have a loss of 29%. I'm not sure how to calculate it exactly, but you can have a loss of 20%, 30%, or you can even lose everything if there's an issue, or if Ethereum fails.
So there is this question that is a classic one in our communities. What happens if the market rates are dropping a lot and are like staying low for a prolonged period of time, like let's say for 1 year, on harvest, the floating rate will be at 2%, for example. So you will be probably at a loss of 29%, as it's like currently displayed there. And to compensate that, what we want to do at the early stage, like there is a mechanism inside AT&T NPH that can incentivize floating rate bonds purchaser buyers with MPH rewards. So you have here at the right, you have MPH rewards. It's 0 currently because we are not incentivizing these floating rate bonds currently. We plan to do it to reach a certain equilibrium in some pools where we see that there is like debt growing. So, for example, in 3CRV, there is currently, if you see, can you select all the deposits? If you select all, So currently here there is $291,000 worth of debt that is available for purchase. So it's one pool that has its debt. If you select another pool, for example, if you select the pool Uni on Compound, you will see there is no debt available. So it's really, according to each asset, there is like a context of debt versus what we sold versus what is still purchasable. So what we want is like trying to have a dynamic incentives in some floating rates bonds to trigger some purchase, and we are dealing with some MPH rewards in the future for this kind of pool where there is like more debt, and we will experiment with that. Like we will see if we can make it more attractive for potential speculators. And like the last thing I wanted to say regarding like the floating rate bonds is when someone purchases them, they are basically leverage longing the floating rates on Aave, Harvest, Compound, or Aave or Wire, like the underlying protocol we are using. So when you buy, for example, you can buy a floating rate bonds with worth 5 DAI, and you will, by investing 5 DAI, you will earn interest on 105 DAI, for example, because the 5 DAI you are investing are financing the debt of the fixed interest deposits of 100 DAI. So we are allowing you to put 5 DAI to earn on 105 DAI. So it's like effectively leverage longing the floating rates on Compound or Harvest or whatever pool you are inside.
Yeah, and I think that's particularly interesting that now we have, of course, very bullish market sentiment, and I also see that actually the debt is quite low. Congratulations, by the way, on the 36 million TVL mark. That's quite a milestone, because I think we spoke like 6 days ago and it was 25 million. So that's a big growth very fast. And then still the on Uni or other ones, the there's no debt available. So a lot of people are just buying up debt. So I think that's also why you don't need to incentivize it yet, but maybe in the future you will do that, right?
Yeah, definitely. And we were talking about the V3, and one focus of the V3 is being able to build other layers of de-risking around the protocol. And one we think is really interesting is being able to make the floating rate bond more liquid, allowing them to be fractionalized, allowing them to be like wrapped into a ERC20 and build other product on top of that, of this kind of debt product. Currently, the floating rate bonds are represented by NFT. So it's cool, but it's not really liquid and you can't do much with that. So what we want for V3 is being able to create more flexibility around the floating rate bonds and unlock new use cases regarding this debt.
Yeah, that's amazing. I think you're front running Uniswap V3 a little bit there, because Uniswap V3 is basically also represented in NFTs, right? So very similar. People that watched the Uniswap V3 video from me from the Ivan on Tech channel, or if you learn about Uniswap V3, you know that when you buy a position in a LP pool in the future in V3, you get an NFT, right? And they also have this question, okay, how are we going to trade it then, right? And they are actually on their roadmap is that they want to do that as well. So chapeau, and I think you're doing then very fundamental work that a lot of people will need, basically.
Yeah, hopefully we will release the V3 of 88 MPH before Uniswap.
Yeah, exactly. So the launch date of V3, when was it again? Sorry, in May, right? Or?
Yeah, like we are targeting mid-May. Like currently we are like working on the specification and like already starting the development of the smart contracts. But the as always, we want to publish something that is quite audited. So we are like making sure that we have some slots in audit firms to go through their process. But it's really like it's always a constraint when you want to iterate fast in DeFi. You have to make a trade-off between being fast and being kind of audited and a bit more secure. Like it is not the panacea to be audited. It won't save your ass if there is an issue and like the auditor didn't spotted the thing, it won't save the day. So audit is cool, but it's not like guaranteeing anything. It's just making your like more qualitative. But it's So it's a trade-off being quick versus being slower, but a bit more secure.
Yeah, and what I really like about how you guys have a lot of audits done, it's probably going a little bit faster. And I also heard about the Hacken or Happy. They have like a model where you can stake, the community can stake tokens, and then you get like security audits, and people can actually stake again, like de-risking that something will go wrong. So I think beta launches will probably look very different in DeFi moving forward. I think more people will stake some assets, get some rewards, maybe get part of the fees, right? And if you want to check the security of 80 miles per hour, I really like this report. You actually also recommended me to read this. It's a higher level report where you can quickly see all the different trade-offs and all the in a very quick glance. And
it's more like this one is more like a quick security check, but it's not an audit like real audit. Like the real audit are done with PegShield and QuantStamp. Currently, we have one with Certic also, and we booked one with Trail of Bit in July. But we don't want to wait July to release some stuff regarding V3. So the whole V3 will be ready before Trail of Bit's audit. It will start mid-July, and after we'll be able to go over like more in depth with the Trail of Bit team regarding V3, and hopefully like the way we see audits currently is mainly not like as a marketing tool, but more as like improving our internal process, the way we are coding, the way we are collaborating together, the way we are uh, handling like some security process between each other, because like there is also the human factor in all of that. So making sure that you are structuring your team in a way that is efficient in terms of managing all of the risk associated with this kind of protocol. So it's more like a big training program for an internal team, like audits done by Trail of Bits, for example. They are not like going to tell you what to do exactly. They will teach you how to do things better in the future also. So it's kind of like, there is different way of auditing things. Like there
Yeah.
is the quick audits and there is like the longer audits that improve the quality of what you are doing in the long term.
Yeah, I completely agree. And it's also a lot about the workflow, right? And are you also expanding the team a little bit? Are you hiring some new developers or team members?
Yeah, like we are like is like some a really hard topic, and I think for every team out there, especially when you are like a small player like us, like we are not like a 1 billion protocol. So to attract talents is really hard, to be honest, because everyone is busy forking the next billion thing stuff. So every like it's really, really hard to find a developer who is interested by building something where he can just fork something else and make a lot of money doing that. So uh, in the current market, bull run stuff, it's always hard to find talents. When the market is down and it's winter, it's easier. Like what I learned with other founders and like talking with other teams, the way to hire right now is like just finding a good JavaScript developer who is interested by learning the Web3 stuff. And in 1 week, he will like learn some stuff regarding how to do smart contracts. If he has 20 years experience in JavaScript, it will be easy for him. So we are not targeting like hiring like a specific Web3 developers who have like 3 years of experience with that. It can be whoever is interested in JavaScript, and we are hiring. We are collaborating with some developers, but yeah, the main struggle we have is finding someone uh, reliable on the long term. That's the hardest part, because there is a lot of mercenary developers like who are here for the money, and they don't really care what we are building. So it's not interesting for us. We prefer to do the things ourselves than onboarding someone who is just here for the money. Like it's not like the way you are building team.
I completely agree. But you know, and then again, so you're basically the developer for the DAO, right? So eventually, we hope, of course, all together as a DeFi community that we can have not like mercenaries, but very specialized people that want to connect themselves to DAOs, right? So then, if you get paid in the ADM Master Power token, you probably feel much more connected. So I can imagine that for some very because the ADM Master protocol has some pretty complex mathematics behind it, and I think you maybe want to hire a quant maybe for some recalculations, and like he can then just work out the math, and you don't necessarily need to be a hardcore coder, but you can also, if you have a more like maybe business background, or if you have a scientific background of any sorts. I think there's always some grants, and I like your funding page where you can basically apply for a ecosystem grant or a community grant, and then basically the DAO will decide and will vote if this is a good way of funding things. And here also probably some more developer tasks or other tasks can be documented. But of course, this is much harder to do in this stage still. But I hope moving forward, this will become a bit easier as well.
Yeah, like the regarding the grant ecosystem, the grant program we have on 88 MPH. Currently, we are mainly financing things under the hood. Like there is a lot of things that is just happening into chat stuff on Discord or Telegram. People asking, hey, I can create this kind of content like video explainers, tutorial, running some community in China or elsewhere, or developing like a small feature on the front end. We want to, like, moving forward, we want to make that more transparent. Like currently, for like making it as transparent as possible, like we plan to release each month the different grants we attributed, and we keep track of all of the grants via request network. So request network is like a tool where you can submit an invoice on chain, and you pay the guy according to what he was asking. So currently we are using that. We are able to pay the grantees in NPH natively on request network. So it's really helpful for our accountancy and transparency at the end also. So yeah, it's like we are still early and we have like millions of things to manage, but we want to make the right move regarding like opening the community and opening the governance treasury to make sure that it's organically created and organically growing by the work of the community members also. And there is definitely skills that we need that we can't really find in our community or can't easily find in our community. So for this reason, sometimes we are paying audit firms. We are like going to work with block science also to have like a digital twin of 88 MPH and be able to simulate some stuff and stress test the system to be able to improve it. So it's part of the V3 also roadmap in a sense to make sure that all of that is working in different market conditions, and the way to make sure that if it's break in some condition, there is a new layer to cover this kind of issue when there is some market conditions that are unfavorable. So it's an iterative process, and we need sometimes to work around that, and some like more talented and smarter guys than us to help us with that. So for this reason, we are working with Trail of Bits. For this reason, we will work with Block Science and others to help us with that for sure.
Yeah, and Block Science and Trail of Bits are not just they're not just the normal companies. I mean, Block Science is one of the best token economic design companies in the ecosystem, I would say, and Trail of Bits is one of the best security companies, I would say, in the ecosystem. So this is a very good move, and I think it's a very cool. And it also proves the point that even because your team is now relatively smaller, but even though as a smaller team, you can still attract these big boys and these big talents, and that's, I think, beautiful, really nice of this DeFi ecosystem. So I would even say, guys, that if you're a developer and if you're watching this interview, if you feel you don't want to attract mercenaries but long-term financial freedom, then you can join 88 miles per hour, because these guys are not just they're now still a small team, but they're being audited by one of the best auditing firms in the space. And they will connect themselves to Block Science, is one of the best token economic design firms in the space as well, with both very good track records. So, definitely I would recommend to at least check out the brand. And also, for full transparency, I also I also used 88 miles per hour quite a bit, and I love the protocol from the start. Yeah, and as we speak, the TVL went up with 1 million, so that's nice.
The Amadeo effect.
Yeah, let's hope so. So yeah, I think the basic concept, right? And I think we talked about the most amazing concept. We didn't talk about this yet, and I like this analogy. Basically, you told it to me as following, right? So if you go to a bank, you deposit some money, you get in return, you get some savings rate, whatever, and then you get some stupid points from the bank, which you can then buy a glass with for your home, or maybe a tea set or whatever, right? But at 80 miles per hour, you actually deposit your savings, and in return, you get part of the become part of the bank, right? So you deposit your savings, and then what you can do is that you can start staking your your tokens that you get, and then you get part of the protocol fees will be allocated to all the people that are staking in the protocol. And there is some other liquidity mining programs, of course, also to incentivize this as well. So I really love this. So it's basically a savings account. You save your money, and in return you become I would say like kind of like a but let's not say shareholder, but it's more like you kind of get like a token that resembles the protocol fees that will be determined by the DAO. It's no central company. It's a DAO. It's a group of people that basically pool their savings together and then decide what's happening with the fees, right? So
yeah, like you like the way you get the MPH rewards is like when you deposit your money here, you have like the fixed interest rate that is offered to you, and you have this MPH rewards that like is a loyalty program where you get this this token because you are using our product. So you can see the MPH token as a vehicle for socializing the governance power and socializing the protocol revenue. We share 100% of the protocol revenue with the MPH stakers. So when you stake your MPH, you are actively becoming a shareholder. Like you have the power to vote on some stuff, but mainly you receive cash dividend on a weekly basis. And the cash dividend is not like something inflated by the native token. It's distributed in DAI, so is the real profits of the protocol. Is not something like a fake return on your staking. It's definitely something like coming from the fees we are applying. Like there is a 10% platform fee on the interest paid out to the depositors. So that's one stream of revenue for the protocol. And the other stream of revenue is as we are pooling the funds and depositing them after on Compound, on Aave, on Harvest, we are able to farm, yield farm Comp, for example, or yield farm farm, the token of Harvest. Mm-hmm. And on a weekly basis, we are swapping all of that in DAI to DAI and distributing it to our stakers. So it's fluctuating. Like every week could be like 10%, 6%, 8%, according to what we were able to receive as a profit in the protocol.
Yeah, and the more the protocol grows, the more the fees that will be collected, and also, the governance can actually decide what will happen. Governance can decide a buyback. There's a lot of snapshot of votes that can be made by holding the token as well. So you actually get a little bit of power, voting rights inside of what's actually going to happen to grants or what's going to happen to the fees, and this will of course grow and grow over time, right? So it's a maturity. Progressive decentralization model, I would say. All right, so very cool. I think this is all very, very clear, right? So, and you can also get like fixed interest rates on like uni tokens or other like other ERC20 tokens as well, and basically everything that's available on Curve or Aave or other like protocols.
Yeah, there is OBTC. There is like some RAIN BTC, like some wrapped version of ETH and Bitcoin also, and of course stable coins.
Yeah, and also you have a temporary like a liquidity mining program to like bootstrap your liquidity to distribute this to the people that are actually helping you guys out on Uniswap, on SushiSwap, and on what is the last one here?
Is a LinkSwap, is a MPH link pool. There is a joint mining program there where you can earn MPH and YFL. It was like a program we launched with the YF Link team. There was OXB1 also financing the YFL rewards there. So it was like a co-marketing things for us and them.
Mm-hmm. Yeah, perfect. And I love it. And you also have the NFT drops. I discussed it in my previous video, and you can get them actually by doing the zero coupon bonds. And the zero coupon bonds, we're almost 45 minutes in. So I think we will save this for another time. But very quickly, what is your 2-minute pitch for the zero compound bonds?
Yeah, so basically the zero coupon bonds are a product, are bonds where you can buy it at a discount until maturity. When they reach maturity, like for example, you have a zero coupon bonds with a time series in August 2021 for uni, in February 2022 also for uni. And if you buy them now, you get a 20% implied interest rate. So they are trading currently on SushiSwap at a discount of 20% compared to the full face value at maturity of the uni. So it's a bond, it's a zero coupon bonds like in the traditional finance, trading at a discount, and you can redeem the full face value at maturity. But like that kind of tools, this kind of product is a first step towards something more interesting, is the structured product. So our goal with the zero coupon bonds is just like bridging what we have currently with another universe where you can mix that with option, for example, and start allowing people to have a 100% guaranteed capital while being exposed to the upside of the downside of whatever product you want, like commodities, like asset, like ETH, or options regarding like call options or put option regarding like whatever asset you can imagine. So like basically structured products, and you can do a lot of different things with structured product.
That is amazing. And again, this is, I think, a DeFi building block, and structured products, fixed yield interest rates are coming. It's all, still, it's all still dangerous. It's all still in development, and we're growing rapidly. And I think, for a protocol now to basically build by a relatively small team to now already have $36 million in TVL is very, very impressive. I need to refresh this page actually to get the latest statistics. My Firefox browser is a little bit lagging, but here we go. 37. There we go, man. So 37 TVL, and we can see all the statistics on the statistic page. I would recommend everybody to visit the protocol, keep the McFly and Zaire. What was the name of your other dev?
Zephram. Zephram is the co-founder, is the lead dev of 88MPH. We are working like in duo mainly. We are the core team, but definitely our goal to ramp up some firepower in the team in the following months to be able to continue shipping stuff in 2021, 2022. And
so any developer that's watching that wants to work for like a fundamental good team, 80 months per hour as a team that will not, you guys have been building throughout the bear market. You will probably keep on building throughout the next bear market, and you are a anti-fragile and very strong team. So anybody that's not a mercenary can join 88 miles per hour and push you guys forward. And I think there's a lot of people watching that are probably very excited, and there will be people watching that are very excited to work with you guys. So always, if you have any cool ideas or any things you want to add, go to the funding page, the grant page. You can always submit what ideas you have or things you want to commit to the protocol. And I think that's a very good mindset to have, because a collective intelligence is much stronger than just a couple of people, and that's basically what we're trying to do here, right? Any cool, also all the links to Giam and to Zephram are all in the description below, and also to the protocol as well. Is there any last things what you want to say to the audience?
Yeah, like the V3, like there is a lot of cool things, and we will publish in a few hours the spec on Twitter. But one thing that made me really think it could be really cool as a use case is allowing everyone to attach any metadata to the NFT representing the fixed interest rate bonds and the floating rate bonds. So you can imagine having NFT earning interest and hanging on your wall, and everyone will be able to do that. Currently, only the core team can attach metadata, so metadata like an image or a video or a GIF to a bond on 88 MPH. But like with V3, everyone will be able to do that. So you can imagine some crazy cool use cases with that, like where NFT will have an interest, like there will be the artist value, the market value of the artist, but there will be also initially an intrinsic value attached with the NFT. So that could unlock really cool
That's
things.
really cool. And you don't have to destroy necessarily the NFT to get on the line or get the interest, right? You can just claim it, as far as I'm correct, right?
Can you repeat that?
You can claim the interest, right? You can claim the interest, or you need to destroy the NFT to get the interest, which some other.
No, yeah, yeah, of course, yeah, you can just claim the interest and your principal, and you keep the NFT, so it could is not destroyed and it will be still there.
Exactly. So some protocols implemented this feature actually already in 2017, but you had to destroy the NFT to get the underlying assets, which I think is a waste, because maybe you want to keep the NFT, right? So
yeah, definitely, especially if there is like a cool artist doing stuff, like where there is like some artists have a real market value, like in like other markets, photographs or painters or stuff like that, musicians. So yeah, it will be like really silly to destroy the NFT for sure.
Yeah, I completely agree. And I think ADML has the coolest NFTs in the ecosystem. Be sure to check them out in OpenSea. And if you actually get some fixed interest rate APY or some zero coupon bonds, so if you actually support or interact with the protocol, you might get an airdrop of an NFT. And that's, I think, a very cool narrative and concept that you're putting forward there as well. All right, man. This was a very, very cool interview. Thank everybody for watching, and let's definitely do this again, man. Thank you very much for coming on the show, man.
Thanks for having us. Thanks for having me, and thanks everyone.
Thank you. Keep up the good work, and we're looking forward to V3. I will also put a link to V3 below. We're probably gonna, I will put that all in the link below. Thank you, guys.